So over the weekend, I was asked about what does it mean when you say don't play on earnings, or what does it even mean when a company has earnings coming up? What earnings is, it's just basically when a company publicly reports their earnings for the quarter. Okay, so Tesla has earnings coming up on the 22nd, on tomorrow. Okay, they are just letting us know what their earnings were. And so when I say about playing on earnings, is that a lot of times when companies have earnings, their stock could push up significantly or it could push down and it could make a great play. But the thing is this, a lot of time when you plan on earnings, it can really be a gamble because a company could have great earnings, could have amazing earnings, and their earnings could beat expectations. Let's just say by 50%. That's some damn good earnings. But guess what? The stock may not shoot up at like crazy, or it may not shoot down. It may just stay the same. Nothing significant will always happen when earnings take place. So someone can look at a company and say, oh, they probably are going to have some good earnings. So I'm going to get into calls because I know this thing is going to shoot up. Come the next day and nothing is really taking place, or it just do the absolute opposite, even though they had good earnings, but the stock is going down and now they're losing money from that call that they decided to get into because they just assume. Sometimes playing on earnings can be a gamble. Now, one of the most craziest ones that we just seen was United Health. United Health had their earnings. They missed earnings, and there was also some fear around, everything going on with Medicaid and just the insurance industry as a whole. And then we all know what's going on with United Health. Their stock dropped $130 on the day. Okay. And when that happened, like there were literally people who probably got into like $900 puts and came out that shit with 13,000, well, 12 to $13,000. Insane. But I know you might see stuff like that and get crazy and excited, like, okay, every time a company has earnings, I'm about to go ahead and get into my position, whether it's going up or whether it's going down, because I don't want to miss a run like that. But a lot of times it's gambling because there will not always be reactions like that when there are earnings. Now, a lot of times too, when there are earnings coming up, a lot of people get in what you call a straddle strategy. I'm going to talk about that in another video so that I can also show you guys example. But just to give you a quick example of what it is, it's just basically saying that when you get a straddle, like you know how you get a single leg call or a put, a straddle is where you get a call and a put at the same strike price. You're saying, I don't know if it's going up or if it's going down. So the straddle allows me to capitalize on whichever way that the stock goes. Now, there are multiple straddle strategies that you can kind of look at because sometimes you can get the same strike price going up or down, or you can pick different strike prices going up or down. It's not hard to understand, but it's best to show you guys example. But sometimes people do that as well. Sometimes people trade like that as well, but they mostly do this when you're dealing with stocks with high volatility. Okay, so we're going to look at that. A company may have their earnings like um, at 4 p.m. So if it says, okay, earnings are going to be on Tuesday, 4 p.m. after the market close, you say, okay, Monday before the market close, I'm going to go ahead and get into my position for that company so that I already got my shit locked in. So when the next day comes, let's see if it goes the direction that I have my position, whether going up or down. Okay, so it's just like thinking be a bit of a gamble unless this company just has some sort of track record for having amazing earnings or having good earnings, and it always goes up. Unless there's some sort of historical data there to support you entering certain positions on earning, be gentle. Okay, just be gentle because you don't want to go all in this thing just moves sideways or it does the absolute opposite. So that is just what it means to play on earnings, and that is just what earnings are. Earnings is just when these companies, public companies, are reporting their quarterly revenue, and then you have some companies who have deliverable reports like automotive companies, Tesla, General Motors, Well, you got Neo, all of them, they have delivery reports too about how many cars that they sold, how many were delivered, simple stuff like that. Okay, so that's what earnings is. And you may see some good stuff happening with it, but be gentle with how you play earnings, because you don't want to get caught on the wrong side of the trade because you decide to gamble on what you thought may have happened.